Hi folks, Scott here, and this is the wrap for Thursday, August 22nd. So the market's still live here. I'm getting ready to take off a little bit early this afternoon and knocking out this daily wrap now. You can see today's price action on a 5-minute chart relative to the prior days. We gapped up, and that was pretty much the low of the day, and been consolidating near the highs. So it's looking like we're going to end up with an unfilled up gap after a 20-day low close. This was the lowest close in actually over 30 days yesterday. So I thought it would be interesting heading into the weekend to show you the results of fading gaps following an unfilled up gap that was preceded by, in this case, to keep sample sizes large, at least a 10-day low close. So unfilled up gap preceded by a 10-day low close went above the 200-day moving average. And there you go. Odds slightly favor a gap up on Monday. Now this is day of week independent, but that seems reasonable. And again, the assumption here is that prices don't roll over and collapse 16 or 17 points into the close, which you never know. There's still 2 hours. It's 2 o'clock Eastern time, but I'd be pretty surprised right now, frankly. So assuming we don't fill the gap, then odds favor a gap up a little bit, but historically using an end of the day stop has been a little tiny bit better set up to the long side, which would make sense, right? This is a possible reversal, multi-day, multi-week reversal setting up. But the data is not nearly as bad as actually I expected to be. I thought a shorting an up gap would be riskier. So overall, I'd say it's a neutral to attractive setup for fading gaps in either direction, at least based upon using an end of the day stop. Now I will rerun these numbers for our members Monday morning and post them in my morning comments prior to the open using our MTG stop parameters just to confirm how volatile the open may be for down and up gaps, and to see if they're tradable or not. Sometimes you'll have a high probability gap fill, but it's not very tradable because the gap would be very volatile and likely to hit your stop before reversing and filling the gap. All right. Anyhow, I thought it was an interesting study and worth showing. And actually, I just misspoke. This is the odds of a gap tomorrow, Friday. I'm actually taking off tomorrow, so Tim will be moderating. So this would be odds for tomorrow on Friday. All right. Let's take a look at what the worksheet showed last night. And you can see we gapped up, or you may know that we gapped up between the high and the close of the prior day, mostly in the DOC zone, some in the DHO zone, and in aggregate you see a really large sample size. And greatest probability of where the gap was going to occur today was right here. See, historically on 5,000 or 6,000 trades across all 8 markets and 3 systems applied, more than half have opened between the high and the close to the upside. This was a neutral setup, so right at my minimum criteria of 60%, but profitability has been dead neutral. When you look at the individual guides, which I'm not going to show today, they were just pretty neutral to weak actually. The DHO zone tends to be a little bit more of a problematic zone. That was in play for the NASDAQ and the Russell, but you knew I wasn't going to be too excited there. And then let's see, a gap up after a wide spread 7-day, the widest spread or widest range day of the past 7, historically neutral as well. So here's what I posted in my pre-market comments. See, fading up gaps after a 20-day, similar to last night's wrap, fading up gaps after a 20-day low and 20-day low close went above the 200. Dead neutral strategy. Historically, what was interesting, these larger gaps, this one was technically a larger gap. It opened just above this 43 area this morning, barely, have done well. Today's did not, though. That's why you can't trust these small gaps. I mean, these small sample sizes. See, up gaps after closing below the 10 and 50 and 200-day, below the 10 and 50-day moving averages and above the 200. Large, not too swift. So overall, just too neutral, too mixed, no clear edge, so no opening gap trade for me. In fact, when I came in the room, I told everyone, if anything, I'd be looking to the long side. Now, I did not do that. I don't trade many follow the gap scenarios. Not really my style. But I did hear from one lady who did, because the data was generally favoring the long side and were stretched to the downside. Reminder too, we've got an oil. If you look on our calendar, we've got an event coming up next week. Before I forget, hold on. Let's go to the calendar on the home page. If you're interested in a new market and or setup, check out our oil event next Wednesday. Trade the opening gap in crude oil. You can read all about it there. It is a paid event, extensive research, almost a 50-page research document where we'll take you through the ins and outs of trading oil historically using a wide number of parameters. Now, if you're interested in membership, I've got an event on Tuesday. You can click there and sign up for that. And I'll answer your questions. And actually, I generally discourage a certain group of people in a nice way from joining us. That's a good event to come see if a membership might be right for you. Because as we like to say, we don't want to waste our time anymore. You want to waste your money. And trust me, we mean it. We're a small company with a pretty large membership, so we stay very busy. All right, where was I? So I passed on today's gaps. Let me show you. Let's see, I showed you that other view. Here's a view with the gap up and the price action we've got. And we're trying to rally here into 2 o'clock. 2 o'clock is a common time to put in afternoon highs, but no gap. I mean, no gap worth trading, so it was a great decision. I would have been stopped out, and you can see none of the gaps even came close to filling. The 15-minute range guides were neutral in both directions. The first hour range guides favored the high breakout. I'll show those super quickly. And I did take the high breakout, but on a delayed entry. See the high breakout here, first hour. I'm looking for 55 and 1.1 here, check. Leans that way in the YM, check. Right at it for the NASDAQ, check. Definitely the Russell, check. You see the target and stop numbers shown here below. Look at the ETFs. Whoops, first hour, it's important. Leans that way in the spider, not quite at my criteria. Pretty neutral. Maybe you could argue the diamonds lean that way. Same with the Q. Certainly nothing against the high breakout. And then the Russell favoring it. So considering how stretched we were to the downside, I thought it was a worthy trade. But I didn't want to have to count on a break of the highs in order to have my target hit. So if you noticed, when I showed you the ES, it had a 4-point target, but the breakout trigger was 52. So my target would be 56 using a 4-point target, which would be beyond the prior highs. So to reduce my risk, and because we were so stretched on this initial move, I posted the announcement tab in our trading room. I would only enter on a pullback to 50 and a quarter, 16.50 and a quarter, and after I left the trading room, I was filled, and I'm very close to getting it hit here. Hopefully we'll have it hit in the next few minutes on the 2 o'clock push, which often happens. So that was my way of trading it today, and so far it looks like was the right decision. So that'll be a nice trade for my only trade of the day for +4, hopefully, knock on wood. In fact, my proximity rule is triggered. We've gone more than 3 points, so I'm going to tighten my stop to entry at this point since I am taking off in just a little bit. So I'm either going to make money or, worst case, be a scratch trade. And there you go. That is the wrap, and we'll see you later. Take care.